Sunil D'Souza, the Managing Director and CEO at Tata Consumer Products, on the show right now. Sunil, hi, good morning. Good to have you on the show. The company's managed a good growth, led by clearly food as well as the Indian beverage business, as I can see it. The food business has given good growth even at a time like this. What do you think went right for you? And more importantly, how sustainable is it?
Yeah, so before I comment on the specific trends going forward, just wanted to highlight that I think we've had a decent quarter in Q3. Yeah, despite cycling a high base of the previous year, which was up by 23%, we still delivered a 6% top line, 28% EBITDA, 22% net profit. And this is not only the top line results, it is across the board. Working capital improved by 14 days, cash generated was up by 30%. We saw volume growth, including in India beverages, for example. While we reported a 1% revenue, we had a 5% volume growth, which is a critical piece going forward. Market share gains across, whether it is beverages or foods, etc. We've increased number of outlets in line with our stated commitment. We've focused on brand building and upped our A&P spends. Innovation, which is the other piece, is at 2x of where we exited. We exited at 1.5%. We are now trending close to about 3% for this year. So all in all, pretty decent numbers, as you mentioned, pretty decent growths across. The foods business had probably a better run on volume, but that's because we have this huge focus on growing Sampann, which is our foray into the pantry of the Indian consumer. Going forward, we do see a little bit of pressure on demand, and we see pressure with the inflation coming. The good news is we've got different businesses and it's playing out differently, so we're tackling that in a different way. But overall on the demand piece, I think it is more stress on the semi-urban rural consumer. You have to remember the base effect in terms of last year, there was reverse migration, etc. So I don't know how those numbers play out. But we are seeing stress where there is a higher percentage of rural in specific geographies in India. We are seeing a stress on the brands which cater to the mass market. Mass premium brands are doing relatively better. And the SKUs, which are lower value, lower volume SKUs, are doing better than the higher volume, higher value SKUs. So there is a bit of stress on demand. We've seen that sort of continue into January. February is looking slightly better. So I'm keeping my fingers crossed that we will be growing out of this. But that said, for Tata Consumer specific, I think we remain focused on the medium to longer term to build a large food and beverage and FMCG business. In the beverage space, I think we've got enough of an opportunity to grow share and premiumize, and this will come through distribution, innovation, and brand building. In the foods business, salt is a share gain, and we've got a long runway. We've also launched a lot of new products to cater to that, and of course, distribution. And in the foods business, the other big growth lever is Sampann. Narishco, which is our RTD business, is growing 100% plus. I think the focus is on geographic expansion. Starbucks had a great run last quarter, and we expect as Omicron subsides, we again expect a very good run on Starbucks. Starbucks, by the way, has was all in for past few quarters was EBITDA positive. This quarter is EBIT positive, and PAT PBT break even as well.
Sure. Sunil, do you also see tea volume growth picking up? And would you say that price increases in the rural sector could be major factors here? Where do you see the volume settling in at?
So the good news is, despite all the upheavals, despite a volatile environment, significant inflation headwinds, we did deliver volume growth on tea last quarter. Volume growths in India were up by 5%. Albeit revenue was 1%, and there is a specific reason for that. Over the last, I would say, 18-24 months or so, we've seen a huge up and down in tea prices. September of 2020, for example, compared to 1 year before that, September 19, the prices were up by nearly 70%. And over a period of time, we had taken pricing up and we were expecting tea costs to come down. Now, tea costs did come down, pricing did go up, but tea costs did not come down as much as we expected because of some specific reasons, specifically drought in a little bit of a drought, I would say, in Assam in the month of May and then in November. So it still settled slightly higher than where it had started pre-COVID, about 15 to 20% higher. That said, I think broadly now the price hikes and the price versus cost equation has settled down. We do not expect tea prices to go up from here. Maybe after the first half of the year, you might see a little bit of softening when the whole crop comes in. So broadly, I think now we're entering a stable environment. As relates to the volume growth specifically, now historically, India has been about a 5 to 7% volume growth and a 2 to 3% price mix growth on top of that. So we do expect that as now the environment stabilizes on the price equation for the consumer, we will start seeing those kind of volume growths coming back. So we remain optimistic that we will go to the 5 to 7% industry growth. And of course, as Tata Consumer Products, we are very, very clearly focused on share gain and premiumization. So we aim to outgrow the category.
Hi, Mr. D'Souza. Now, tea prices as well have come down, but there is continued inflation in other raw materials. So how will that impact your margins?
So if you look at Tata Consumer business, we've got three big businesses. Of course, we've got smaller pieces as well. India Beverages, India Foods, and International. In terms of margins, International delivered its best ever quarter on margins last quarter, EBITDA margins of about 18%. So that is on a stable footing, albeit coffee prices going up, tea prices going up, inflation going up. So we will calibrate pricing in line with what we see on inflation to make sure we maintain margins. On the foods business, we are seeing inflation, and inflation because of two pieces. The extended monsoon impacted the salt brine, which is available raw material to make salt, and that pushed up prices. And of course, you've got the oil and related downstream inflation impacting it. We took price increases about 15% so far between August and November. And now volume has started to come back. So we remain confident of maintaining margins there. Again, we'll keep a close watch on how it plays out. On tea specifically, we're seeing the reverse trend on tea costs. I mean, tea costs have come down over the last 1 year or so. And like I said, pricing we've taken up gradually over the last 1 year or so. And broadly, we are in the ballpark of where we need to be on margins going forward. We're in a comfortable space. So as long as we don't see any dramatic changes on tea costs or significant movements beyond what we're seeing right now on packaging, freight, oil, etc., we should be in a good spot.
So we'll let you go on that note, Mr. D'Souza. Thanks very much for walking us through your earnings and outlook ahead for Tata Consumer.